everybody. Happy President's Day, everyone. Oh, hi, Brock, Shahab, everyone. Okay, so for today's U.S. session, I'm strongly neutral. Anyone else with me? Being strongly neutral with the U.S. markets closed, I think it's kind of the best way to look at a market that's not trading. And so we'll look ahead at a few things that could develop in the coming days for my segment here. And I just wanted to say hello to everybody, let you know that we're not holograms here. So before I get to some of my analysis, because we're closed here in the US, Shahab. Okay. So I have an announcement, and it's with the greatest of pride. I'd like to announce how humble I've become. Okay, I want to make that announcement with the greatest pride that I am now pretty humble. Anyone else humble out there and proud of it? Anyway, Blake was talking about the Aussie late last week. So I took a look at it, and yeah, you know, we're into new low ground territory, right? But when I look at it here on a 4-hour, I'll be looking for one more low in Aussie to get long. You know, it shows up pretty good on the 4-hour and the daily too. But the question is, this will be making a new low. Let's see what happens, say about 60 pips low, around 6.5 or so. But the question is, do you want to buy a commodity currency that is making new lows here? Or when you look at the longer term picture of Kiwi, we're not even close to the lows. So Aussie will make a new low, and maybe you look at 78.6 back of this, and the stronger of the two charts is Kiwi, unless Aussie Kiwi begins to turn, which is a possibility. Okay, but I'm seeing a 3 drive coming in Aussie and a higher low coming in Kiwi. I don't think another 70 pips, even 100 pips down in Aussie is going to take Kiwi down to 62 cents. Okay, that's still 200 pips from here. With that being said, Canada is holding where it has to, right here, the moving average and the breakout line. So, you know, this is an area that if you like Canada for another pop, you do it here. Otherwise, we're going to negate the breakout. And I think Blake was looking for 150 for a long side entry. Okay, and what else was, oh, S&Ps are still diverging up here daily, 4-hour, 1 hour. Maybe we're going to try that 3,400 area. I'll be shorting it again. And I think that's about all oh yeah. So the Dixie, some people had 99.20 as the potential high of this rally. And, you know, we're almost there. Others are looking for a target slightly above par, up around a little over 100. And it's my contention that Euro will lead a true bear market in the dollar, which hasn't happened, as you could tell by Euro GBP. And we're starting to see it now, where Euro pound is not making new lows like the Euro has. And I do expect a turn here before the dollar turn. but it's hard for me to believe they're not going to go for these lows in euro pound 82.77. So I'm on buy alert. I know it looks ugly, but if we are going to have a top in the dollar, I think we're going to get some nice action here. And even if the dollar isn't a big bear, from wherever the bottom comes in, look at this confluence up here at 87. And then you look at where we were from 93, just a fib retracement would do it. Let's take one more macro look on a monthly. When you look at a monthly, you know, you had this, I'm sure Steve would call this impulsive move. And for about 3 years, almost 4, 3.5, we've been in this range. So we're testing the bottom of the range. But really, when I look at this, it doesn't look to me like there's anything that impulsive except for in here, and almost looks like a rectangle or maybe some type of continuation formation developing. And this could even be a neckline if we get a right shoulder down here, you know, and start breaking out above 90. The measure move would take you to 110. So that's something I'm going to be looking to buy, possibly a campaign trade, a way of participating on a dollar top. I think EG is going to be a good way to do it. I think it tells us before the turn in Dixie and Euro. So we'll pay attention to it. And with that, happy President's Day, Blake. Are you strongly neutral, the U.S. session?
Well, there's nothing happening, so I guess I am strongly neutral. I mean, this is. I'm
glad to get up for this.
I'm so happy that we're broadcasting this morning, but you never know. I mean, you never.
Yeah.
So, you know, we could have got up this morning and, you know, the DAX be up 6% or down 6%. You know, I mean, it could have been that, but you know. Obviously not the case today. Today it's been, you know, very, very tight ranges in the FX market.
You know, it's a good day to plan ahead.
Yeah, it's a good day to probably just, you know, take a look around. These are the days where you really want to be target trading. You know, say, you know, I'm not going to buy or sell whatever until it gets to this, whatever this level is, you know, so whatever level you're looking at. Like, for example, I still think that the euro has the ability to drop down to the, you know, 108.20 to 107.80 level. And frankly, a test of 108, I'd be interested in possibly picking up a counter trend, you know, bounce. Now, the question is, do we get there? You know, because it's very easy to sit here on a day like today and say, oh, I think it's going to bounce somewhere around here, so I'm going to get it here. And next thing you know, it's down at 108 and it spends all day just grinding lower. And now you're upside down 30 pips in a euro trade because you bought it here at 108.30 and it finally reaches where you thought it was going to get to, and it takes all day to do it, and you're like, you know, God, am I going to have to sit in this thing for another, you know, 24 or 48 hours just to get break even when you could have just, you know, entered where you wanted to in the first place? And that's why it's really important when you have very little volatility, like you know, these holidays, or you know, just we're seeing pretty low volatility environment just in general. It's important to get in where you want to get in and only there. You know what I mean?
Yeah.
One of the trades that I've been wanting to do, and you know, it's like I'm sitting here waiting for it, and hopefully it's going to happen, is I really want to buy the US dollar Canadian below 132. I still believe that this long-term false breakdown in the dollar Canadian will lead to an upside move. But as I told you guys last week, I'm not paying up for it. I wasn't going to buy it when I was up here at, you know, 133. And I am waiting for a dip down to 130, basically to 132. And we're only 30 pips away, but it's like, I'm not going to pay up for it either. You know what I mean? I'm not gonna. I'm
Let
gonna
the market come to you.
yeah, you have to let the market come to you in this environment. You just have to. You know, like I said, this is a very similar situation to the euro. I could say, well, you know, I can buy the dollar Canadian right now just because I'm impatient, right? I'm impatient. I'm like, it's eventually going to get down here, but I don't know. You know, there's no volatility, and I'm just gonna, you know, maybe I'll just get in now because there's 161% extension of this extension right
I
here.
used to rationalize it this way. I'll just put a piece on so I pay attention.
Yeah,
That's
yeah.
not a good reason either.
Not in this environment. If you have volatility, like if the dollar Canadian, you know, the last, you know, 2 weeks have been moving 100 pips between its highs and lows every day, then you can rationalize, okay, I'm going to get a little piece here just in case it doesn't get all the way to where I thought. But when you have currencies that are trading in 30 pip trading ranges for the day, and they have been doing that consistently for the last couple of weeks, you have to wait, you know, you have to wait for your price to get wherever you want it to get to. And if it does, great, take advantage of it. If it doesn't, move along. And that's just you know, I'm giving you guys a little bit of coaching, if you will, during these times because, well, A, the market's not really moving today, and B, because this is a great time to really think about these types of situations, because we are in a very low volatility environment. Are we always going to be in a low volatility environment? No, I don't think so. You know, I've been hoping we'd start stretching out of this low volatility environment for the last few months, but it is what it is. I mean, we got to take what the market gives us right now, and for right now, that's what we're seeing, right? And so that's, like I said, it's very much target trading. One of the trades, you know, like I said, that I want to be with the US dollar Canadian, as I want to be long down here. I have an order to add to my US dollar Canadian or US dollar Japanese yen short in the 90s. I actually think that this is developing, and I may be wrong here, obviously, but I think we're developing a head and shoulder type of pattern, right? I think that's what's developing. So, but it's like, okay, well, when it takes, I mean, we've had less than a 20 pip trading range today. We've had an 18 pip trading range, and when it spends, you know, the last 12 hours grinding, you know, just a little bit, then you have to be very patient to wait for price to get to you. So I'm hoping that we reach for 109.95, and then I can, you know, add to my, you know, dollar yen short, or my yen longs, if you will. And, you know, that's it. You know, you just have to be really, I guess the point I'm trying to make is you just have to be really patient. There's not a lot moving today. We do have the cable that's that came off a little bit. We've seen the pound come down. One of the things that I should you know, mention about the pound is that we are struggling as we are whenever we get above this 130.60 level. It seems to be struggling. Do I want to short it here? No, but you know, I think if it gets back up to 130.50, 130.60, if you want to try to take advantage of it up there, I think that's where you have to do it. You know, you just, again, this is kind of finding where you want to be. One of the things that just looking at the cable, one of the things that I would be interested in is if actually we spike above these highs like this, and we hit this trend line here, I'd be interested in selling, you know, somewhere around here if I could get it, you know, something like that. You know, but I don't know if we're gonna get that. You know, I'm just, you know, guesstimating and you know, seeing what happens today. But it is, just remember, it is President's Day. It is a holiday, so you know, we are already in a very low volatility environment as it is, and so it's just accentuated today with less going on in the North American session, when we have so many traders that are, you know, just away from their computers. Looks like we have a few questions. Hold on really quick. Let's see. FX Trader says Euro's too heavy, cannot go up. What if it goes straight up and you miss it? Well, then I miss it. I mean, if you know what I in the week ahead video, what I think would happen is if it bounces like, you know, through this resistance, I think this is going to cause a little bit of a squeeze. And then we get to 108.80, 108.90, and then that's going to be a, you know, setup for a short. It's going to give you a good, you know, risk reward at the breakdown point. That's what I would be thinking. Ride the something said, good morning. Is there a carry trade in shorting the dollar yen? No, actually you're going to end up paying a little bit of interest by being short dollar yen. I'm actually long yen through futures personally right now.
You know, I have a suggestion for that person who asked you, Blake, what if you miss it?
Yeah.
And they're putting a lot of pressure on themselves. I could just tell by that question. So why not write, I am going to miss trades every day, and that's okay because there's always another one.
Yeah, I mean, I miss trades all the time. I miss the euro. You know, I miss the euro short trade, and you know,
100 trades a day.
Yeah, well,
you know, not 100, but you know what I mean.
But where you beat yourself up, and this is where you know, when we're in a low volatility environment, and really these types of moves only, it seems like they're rarer and rarer. This, you know, especially for like the last couple of 4 or 5 months, to get a move straight down like that. For me to miss that downside move in the euro, it is a little upsetting because, you know, it's like, damn, why wasn't I? You know, a couple of guys from my office were all over it, and they were just, you know, buying puts for the euro back when it was at the 1080 level, somewhere up here. You know, they were buying puts on the euro, and I'm like, you know, I didn't think we were going to breach these lows, so I tried to play counter trend, and then I just ended up missing this because the bounces were too shallow for me to sell into. And so, yeah, that's for me, that's what's most upsetting, is that I missed a really good move. But it happens, you know, and that's, you have to get over that situation. I mean, you know, I'm past it. So now I'm just like, next, you know, what do I see next? And then, you know, you just have to be patient and wait for your setups. And a lot of times I miss trades, and that's a fact. And that's going to be a fact with anything that you do in the markets, right? So you know, like I said, you just kind of have to get over it and understand that that's part of the game. I'm not, and I never have thought of myself as somebody who's going to catch every big move in the market. I just don't, and no one does. I trade with some of the best, and they're like, man, I cannot believe I never got a piece of that, you know, and they miss big moves too. I hear it happen all the time, you know. But the thing about trading is not necessarily catching the big moves. It's just finding the best risk reward for whatever setup is developed at that point in time. And if the trade ends up really going in your favor, being able to maximize that move the best as you can. And like I said, a couple of guys from my office really, you know, they nailed this euro. It was easier for them to sit in it because they bought puts. You know, it's like, okay, I'm going to risk 10 grand to make 60 right now. And, you know, they just get in a trade and sit in it. And, you know, next thing you know, that instead of making 60 grand, they end up making 100 grand. They're like, you know, wow, you know, that move lasted a lot longer and was a lot stronger than I thought, you know. And that's kind of where I'm at with like the yen, you know. And this is one of the trades that I feel pretty strongly about right now. As long as we're staying below 110, is the continued rally in equities and the lack of ability for the dollar yen to capitalize on the upside. I know I sound like a broken record, but the fact of the matter is the dollar yen is not moving higher with equities. And if equities ever do pull back, the one currency that we see that responds it's very correlated with equities on the downside is going to be the dollar yen or the rest of the yen pairs. So that's why I believe as long as the dollar yen stays below this, 110.20 level, this one up here, 110.20, 110.30, it's actually 110.28. As long as we stay below that, really, the risk is still for further downside in the dollar yen. And, I'm just hoping that the S&P, that we're really close to this 3,400 level. I'm really hoping that the S&P does find some sort of peak up here soon, and then we start giving back some of these gains. Is this going to be the big turn? Probably not, but are we due for a bit of a pullback in equities? Yeah, I think that this coronavirus, even though the coronavirus itself may not be as deadly to humans, it's not. Let me rephrase that. It's not going to be as much of a pandemic or an epidemic. I guess would it be an epidemic? What's the difference between an epidemic and a pandemic?
The first three letters.
The scale actually.
Yeah,
pandemic it's the scale, right? Bigger, right? Pandemic would be a big scale.
Yeah.
And epidemic is more of centralized, I guess, right? Something like that.
Something like that, yeah.
I know you guys have Google, and I'm not going to Google things while I'm talking, but I'll state that I don't think that the coronavirus is going to be as serious globally on human lives.
Shane's got it. Pandemic is global.
Okay, pandemic is global. Okay, that's an epidemic.
Is pand is from Pandora.
Yeah. Okay, thank you. And so with that being said, I still think that the coronavirus is going to have a negative impact on global growth because of what is happening. Look at the slowdown that's happening in China. To think about all those supply disruptions for the next quarter, it's probably going to start weighing on. I would assume it starts weighing on asset prices soon, but we haven't seen it yet. And the argument could be, well, if this bounces off the Teflon market again, what's going to stop the S&P from going higher? That's the flip side of that argument. But we'll see if equities actually start to take notice, if data starts to deteriorate, in the coming weeks and months ahead. But I do need the S&P to start rolling over lower in order for the yen to actually start strengthening, and that we have not seen. We just haven't seen that. So I hear Steve and Stelios popping their heads in, and what's going on, guys? How are you guys doing today?
Good morning.
Good morning, mate.
Good morning.
Everything good.
I'm assuming you guys in Europe are not celebrating our President Day.
What do you think so?
Or nor anybody else in the world for that matter. But but therefore it has led to very low volatility environment overnight. We just haven't seen a whole lot going on. Is there anything that happened since before I was awake that got your attention?
There was one thing which I thought was pretty important. It relates also to your dollar yen, what you were talking about before. You saw the GDP print out of Japan. Did you see that?
Yeah, it was kind of abysmal.
Minus 1.6%.
And Singapore, right?
Yes, and this is Q4, so this is before the major events of the coronavirus, which will inevitably happen and pass through the economy. For those who are not aware, Japan,
be the scapegoat for all central bankers on why their policies failed. They could blame it all on the virus.
Yeah, like they needed an excuse for that.
Well, they do.
Yeah, But what the Japanese did, they basically hiked sales tax. So they've done this once before. It was pretty catastrophic last
A
time
few
as well.
years ago, Stelio, yes.
Yes, they were saying we don't think the effect's going to be as big this time. Well, think again. minus
Think again.
minus 6.3% year on year, minus 1.6% quarter on quarter. I mean, that's pretty huge. And as I said before, with the coronavirus coming, I think Q1 is going to be, well, if it's better than this, is going to be a victory, I think. So I think Japan is certainly going into recession.
And and just to add on to what you're saying, there's a couple of reports out that that Japan wants to limit its to the limit population masses in one spot. Basically, I read a couple of articles that were basically saying that they're trying to limit public gatherings because they're worried about the coronavirus.
Do you know what they've done? They've actually, you're absolutely right. They've actually cancelled all the entries for the marathon, which is in, when is it, April? I don't know when it is, but or March or something. It's quite close by, and they're only going to let the pros run. So all the amateurs, like 35,000 people, they said you just don't come. So
what about the Olympics this summer? In Japan.
Yes, good question. Very good question.
Yeah, so I don't know. It will be interesting now.
I guess they'll wait more before they decide about that.
I'm sure. I mean, that's obviously a few months away, and it's a big deal. I heard people say, well, the coronavirus it'll eventually die off as temperatures start to rise. But you look at places like Singapore, that's right off the equator. I don't know if you guys have ever been to Singapore. I have. It's hot there all the time. It doesn't matter that you're. I know. I mean, maybe Singapore does have a winter. I'm sure Nitish could tell us, since he's in Singapore himself. But I've been there, and it's just hot and humid all the time, right?
An interesting thing that we've even admitted here in the U.S. is that it will be around and become part of what happens during regular flu seasons. It's not just going to disappear. It's going to be, another flu in the mix next year.
Yeah. And Brock says Singapore probably has a dry season. Yeah, it's a dry season that's, you sweat half as bad as you normally would when you're that close to the equator. And I mean, I just remember Singapore, I'm like, man, didn't matter how much antiperspirant I put on, I still sweat like gross. Anyway, but that was just me. Anyway, and I'm a gross person anyway, so let's just we'll just keep it at that. But I'm just a sweaty American. But overall, I guess the point I wanted to try to make, while I was here with you guys, at least the first part of the face webinar, is just be really careful what you're doing the next, near term. It doesn't even matter today so much. It does matter even more today, actually. But it's just near term. Be very targeted in what you're trying to do. Like, I can give you another example. I'm trying to buy the US dollar. Well, I'll just go back to this example. I'm trying to buy the dollar Canadian down here at the 38% retracement, basically a move below 132. I'm going to get long. I may miss this. We may do this, and we might have some sort of pennant formation, and it just start rallying. Yeah. And I'm going to have to trade it differently. I might end up missing, this low that might form around here over the next day or two, and end up chasing it higher as a different chart formation forms. But that's part of it. I'll have to let it develop versus me just assuming I know what's going to happen, because I don't. And in and as you guys see, I mean, in this low volatility environment, a good example is like the dollar yen. I mean, the dollar yen is just kind of grinded higher all night long. It's not, and it's not going anywhere really, but slightly higher throughout the course of the night. I mean, you just look at, here's an hourly chart. It's just, boop, doop, doop, just the last 12 hours, just kind of grinding up, So you know, this can happen to you if you prematurely get into a trade and it doesn't go to where you wanted it to go. It may just grind against you for 10 hours, 12 hours, 24 hours, where you're like, man, I should have. Most of the time during this environment, what happens to me is if I get in prematurely is 12 to 24 hours later, I'm like, man, if I would have just waited to get my price, I would have been in a much better position if I just waited for my price to the market to come to me versus me getting impatient. So more times than not. So anyway, that's kind of what I wanted to talk with you guys today. And I'm not going to, Steve has all sorts of pairs he can go through and give his analysis on. You know, obviously I just wanted to cover a couple of things that I'm looking at. But remember, no matter if you're, you know, it's a slow period or not, you know, having ForexAnalytix, being part of this community, and, you know, having the app on your phone is really important, because these support and resistance levels, as they get breached, it triggers a push notification to your phone and your mobile device, email if you want it, desktop notifications if you allow ForexAnalytix to push you notifications through Chrome or, you know, Internet Explorer, whatever they call that nowadays. But yeah, you know, whatever browser you're using, even if the updates are fairly limited, which I only pushed a couple updates this morning, because obviously the market's just not really moving. But when these support and resistance levels get breached and you get notifications on your mobile device, it really helps you identify if if things are starting to move. Because like if I'm sitting here and all of a sudden, you know, a bunch of support levels go off and a bunch of resistance levels go off, I know there's a jolt of volatility in the market. It'll pull me back over to my, you know, my quotes or my desktop, knowing that we're starting to see some volatility, we're starting to see some movement. So it's a real valuable, it's a valuable tool just in that sense. It's like having, you know, a bunch of alarms set up, and you know, they're being tripped, and you know, oh shoot, the market might be moving right now. I need to go take a look at, you know, the charts. So anyway, just remember, it only costs $1 to try us out for 10 days. Even in this slow market environment, make sure you try us out. And then also visit our webinar sponsor, which is going to be Forest Park FX. And if you're ever looking for a different broker, if you're not happy with where you're at, make sure you reach out to them. You know, you can be part of the reimbursement program, or at least ask some questions where they might give you suggestions on a broker that better fits your needs than the one you're with right now. So I'm going to turn it over to you guys. And I want to say, for those of you that are around, have a wonderful President's Day. Try not to get into trouble. Let the market come to you. And with that being said, I'm going to pass it over to my team.
Thank you, Blake.
All right. Thanks, guys. Have a good one, and I'll see you guys in the chat room. All right.
Thanks, man.
Thanks.
So
Thanks, Dale.
pretty quiet today, as we all know. I think for me, the main event was Japanese GDP. I still can't get over that number. And I'm actually very
kind
surprised.
Of shocking.
I'm very surprised the yen isn't, the dollar yen isn't higher. Really surprised. But then again, even with the risk on sentiment for weeks now, it's been struggling to break 110. So it's been very stubborn and very slow moving. So, you know, let's see what happens. The other thing, obviously, is the whole effect of the coronavirus. We keep talking about this every day, but, you know, I think it is very important, even though we've had some positive headlines out of China saying, oh, it's going to be contained and we're going to be able to face it, blah, blah, blah. Remains to be seen. The Chinese are helping or trying to help with monetary policy. So they're hinting that they're going to be cutting taxes and you know, cuts in interest rates, all sorts of stuff, because clearly we can fix everything with central banking policy.
Of course.
Right? So let's print some vaccines.
You know, the question eventually comes down to having people isolated and letting the economy go to hell, which was already a slow growth economy, or putting them back to work and not worrying about the contagion. That's really the choice it's going to come down to. And they already are sending some people back to work, and they're working with plastic around their workstations, etc. That's really going to be the choice for governments, especially in China. Do we continue to contain it and have our economy grind to a standstill like it is now, or do we risk the spread and at least keep the wheels of the economy going, although at a slower pace?
Yep, that's
Tough choice.
a dilemma. That, yeah, but you know, I've said this before. If one country can do it, can actually take the measures that need to be taken in order to somehow contain this, it's China. I mean, they are, whenever something needs to be done, they can get it done.
It's too bad they started late.
Well,
yeah, they don't have to worry about political repercussions or whatever. I mean,
Well, I don't know.
at least a lot less than, democracies, Western world democracies would.
yeah.
We can at least agree to that.
I think
Well, I don't know.
I think the problem with this virus is that we still don't know a lot about it. I mean, I heard the case about somebody being tested. They were negative for 15 days in quarantine. They were negative when they were tested. They were put in 15 days in quarantine. Then they showed symptoms.
After they were released.
After they said 15 days. No, while they were still there. So the incubation period can be longer than 2 weeks, maybe 3 or 4. I mean, I don't know what the numbers are. I don't think anybody knows. So that's what's really tricky about it. You can't know about it until maybe it's too late. So that's what worries me.
Yeah, that's why there was like a recommendation that they should extend quarantine periods to 4 weeks for people involved.
Yeah. I think in the end, I think Blake is right. I think in the end, in terms of human lives and all that, hopefully it's not going to be a huge issue. But the effects on the economy, on the global economy, man, I think we're going to feel them for months.
Especially the supply chain issues.
Yes. And the
so
stock
stock
market,
up on toilet paper.
Yeah, but the stock market might try to casually ignore this, but it won't go away.
Might try. It has already done so very successfully, right?
Oh, there's a 5% break coming someday.
Yeah. Yeah. So that's really
This week.
This week, you think?
Yeah.
Well,
for sure, this decade. For sure.
Yeah. This week we peak. This is the week that the S&P peaks.
You're a poet.
Rhymes, so it has to happen.
You're a poet and you don't know it.
Yeah, but my feet are
Right.
only wear a 10, so they're not long fellows. So Steve, are you strongly neutral today?
Strongly neutral, yeah. No, it depends.
And for the U.S. session?
Depends on, first of all, we know that, today's session is going to be,
closed?
More or less, probably a non-event.
Yeah. So I that's why I'm strongly neutral here today.
Yeah, but, having said that, there are still a few interesting charts that I think we should pay attention to, with, the main ones I would want to mention being gold. Why? Because gold is now on the precipice of breaking higher from this triangle, both on price and RSI. Yeah, so I have to say that I definitely favor a breakout higher from here. Not coincidentally, obviously, the exact same situation applies to silver. You can see it here, testing this confluence of resistances, also poking its head above this RSI trendline resistance. So gold and silver look well positioned to break higher from here.
I think gold will make a new high and silver will not.
Definitely gold is closer to making a new high. So yeah, there is a chance that will be the case.
Just a guess.
Yeah, there is a chance that will be the case, but there is also a good chance that both of them are going to actually produce a new high. So anyhow,
I think that gold will make a new high and silver won't.
Anyhow, in my mind, there is one thing that is unquestionable, and that is gold above 1547 and silver above like 1720, you have no reason to try to fade those. So as long as we're holding above these levels, I have no reason to change my bullish bias, and I'm looking for higher levels. Now, Palladium is also at the precipice of breaking higher from this triangle. So, if you like Palladium to the downside, more if you like Palladium to spend more time consolidating within this range, this is the place you want to be short. But keep in mind that, if we break out from this, I think that the next move higher should take us to 2,700, in which case I will be actively looking again for a move lower, a much stronger move lower. So, already three metals looking, about to produce a worthwhile move. Now, at the same time, and now we come to something more relevant to what we were saying before, look at the USD against the Chinese Yuan. It's also in the precipice of breaking higher from this descending channel, right? So this move lower definitely didn't have impulsive characteristics. We found support once again at that channel's trendline support. We moved higher, and now we've spent like a couple of weeks consolidating right on top of resistance. So, this can move either way, but I really believe that, the chances favor a break to the upside here as well. So, a move above 702. And in my opinion, there is no real reason why we shouldn't find ourselves back retesting the 720 high, if not higher from there. I don't know how many of you noticed when Blake was showing the platform, but one of the most recent news in the live stream that we have on the platform, you can see it here, was this one, right? US President Trump's administration is weighing new trade restrictions on China that would limit the use of American chip-making equipment as it seeks to cut off Chinese access to key semiconductor technology, according to people familiar with the matter. So bottom line, I don't know what you think or what you thought about the trade deal, which, as I've said many, many times, the phase one of the trade deal is in essence nothing. The market kept, taking advantage of the upcoming cut-off deal again and again and again, because this market is obviously just looking for excuses to keep moving higher. But what we can say with certainty is that we haven't seen anything come into fruition yet. Now, initially, the coronavirus excuse, I'm not saying that it's a non-valid excuse, and we haven't seen anything come into fruition. Now we've already seen like headlines like that, so I find no real reason why the USD should be capped here for and not have more upside coming. Now, so already showed like 4 tickers that, in my opinion, are at important levels, obviously, and I don't want to stress that enough because it has already been done by everybody that spoke before. Obviously, USD yen is also at a key resistance area, right? Multi-year trendline resistance. So, that's 5 of them. So I think that eyes should be focused mostly on those, and there is a very good chance that all of those can be actually breaking through important levels, more or less triggered by the same type of event. Now, I have no idea in advance what that is going to be, but what I'm saying is that if we get like some important headline or some risk of events, those can start moving at the same time, and gold, silver breaking to the upside, USD yen really getting rejected from this resistance, USD Chinese Yuan breaking to the upside as well, you name it. Now, one of the things that have been moving, not today, but I mean, since last week, has been crude. So, we mentioned on Friday crude, and, since Friday, not much has changed. But, I want to mention it because I know that a lot of people were trying to bottom pick it. And, we had some RSI divergence, and this has played out nicely. But, I want to stress out here that, this small rebound doesn't really change anything, because in my opinion, as long as we trade below like 55 roughly, the path of least resistance remains to the downside. So I wouldn't rule out an extension higher from here, although we are currently testing resistance. So, we can just turn lower from exactly where we are. The risk reward does favor short positions from here, but it's not unlikely at all to see a bigger recovery, in which case I would start actively looking for shorting opportunities between 54 and 55 dollars. So that's what I think about this. Now, if I can explain more deeply about palladium, what do you want me to explain? Palladium in general is, has done very well. It's an industrial metal. Demand supply dynamics have really helped with, emission reduction restrictions, etc. So that's why we've seen this like massive multi-year rally. But I think that price has really gone way above what makes sense, too much, too fast. And I caught the downside and made some decent money when we had this correction. But I'm really a firm believer that this massive move higher should produce sooner rather than later a much bigger correction to the downside. But as I said, we're currently seeing a consolidation, a rather wide consolidation within this triangle. And it is likely that we're going to see triangles are usually like terminal formations. So they tend to break in the direction of the trend. So in this case, that would imply a break higher. But usually, the move they produce out of them is the last move in that direction before you see, some deeper correction or even a reversal of the trend. That's why I said that, I'm looking, for an eventual breakout from here, leading to 2,700. And why 2,700? Because that's the 161.8% extension of this triangle's range. So it's usually good fib extension to look for an exhaustion. And that's why I'm following this thought process I am. So that's what I think about palladium. Now, do you think the Chinese will allow the USD CNH to go higher? Yeah, why not? Do I think that they're gonna let it have some type of a massive move? No, but do I think that they can actually let it, grind higher from here? Sure, why not? I mean, I understand where you're coming from, Ziggy. The whole point that, this is probably going to show bad faith, with the deal and everything else. But, let's take it oppositely. From the highs that we had here, we've actually moved, we're actually currently like less than 3% lower. So take it oppositely. If they really wanted to let the Chinese yuan strengthen, due to the deal and everything else, would we have just seen like a 2.8% move to the downside? Especially consider the fact that big part of this corrective move lower came in advance of signing the deal and not following the fact. So, now they even have a good excuse, right? I mean, they have the coronavirus, which, based on valid assessment, should create a big headwind, at least for a period of time, to the Chinese economy. So at least now they even have a valid excuse. So yeah, I don't consider it unlikely seeing the Chinese yuan weakening further from here. Especially, I mean, they can't even blame the Chinese yuan, but because consider this. Let's overlay the DXY. So, you know, somebody can easily claim here that, okay, I mean, the DXY has strengthened that much, and the Chinese yuan has actually followed in direction, but not in extent. So, you know, for example, the Europe is moving lower against the dollar a lot more than the Chinese yuan is moving lower against the dollar. And Europe doesn't even suffer from, you know, the coronavirus issues at the moment. It has its own internal problems, but, you know, why isn't China having issues? I mean, huge issues. Yeah, they do. So, you know, I don't think somebody can even blame the Chinese yuan because in general, the dollar remains very, very strong. And as I've said here multiple times, I think that both of those bubbles are going to implode more or less at the same time. I think that the dollar bubble is going to um, um, burst at the same time that the stock market bubble is going to burst. And somebody can easily ask, you know, look at this chart. Do you see like this type of behavior being a bubble behavior? No, I mean, based on the chart, no, the move higher in the dollar is definitely a grind, not impulsive. The reason I'm considering the dollar to also be in a bubble is not the type of a move we can see on a chart, which is, you know, definitely not a parabolic move and what somebody implies when talking about a bubble, but it's the huge disconnection between the fundamentals of the US economy and what the dollar is doing. So that is why I consider both of them a bubble. I think that any way things end up working out, the dollar is going to be a lot lower in a period of time. And the stock markets, the US stock markets should recouple with what has been happening with the global stock markets, because I don't know if you've seen the chart, you know, global stock indices against minus US against the US. I mean, there is a huge 10-year disconnect between the two of them, and sooner rather than later, one will have to meet the other. Please, can you take a look at Bitcoin? Yeah, I would actually mention both Bitcoin and Ethereum regardless, because it's one of those, you know, things that I'm monitoring these days because they've actually been producing some decent moves. So, you know, both of them have broken out. You can see here Bitcoin broken out from this multi-month descending channel, and here is Ethereum also breaking out from a multi-month descending channel. Much stronger move in the case of Ethereum. So far I'm viewing these pullbacks because you see that we actually found some highs last week, both in Bitcoin and Ethereum, but I'm considering that these pullbacks will probably find buying interest. So I wouldn't suggest, you know, trying to fade these moves higher, because I do think that probably we're going to see more buying. For example, in the case of Bitcoin, I would assume that a move to retest this channel, this broken channel, might, you know, this previous channel trend line resistance might act as support. You can also see that at the same area, you also find the confluence of the 50 and the 200 daily moving average. So I do think that a move back towards 9,000, 8,900 is going to find, you know, several buyers stepping in. And in the case of Ethereum, you know, Ethereum went a lot more vertical. I mean, you can see here that the daily RSI actually came close to 90. I think that, you know, for Ethereum, you should be looking for like 235, 220, 195, and 175 as buying zones. Now, you can't say in advance which of those is going to work, but I think that you're going to know it once it turns higher, because you're going to start seeing one of those massive updates. So I do think that both of them still look very decent for more upside. Now, how far that upside can take us, not sure yet, but these markets tend to be very volatile and tend to be very sentimental. So nothing would really surprise me, I have to admit. Let me see other questions. Pandemics, epidemics. Yeah, we covered that. Is there a carry trade in shorting the USD yen? No, absolutely not. No. There is a carry trade in being long the USD yen. Not a big one, not something to write home about, but you're getting paid to be long the USD yen. You're not getting paid to be short the USD yen. Did I possibly miss your discussion of the situation, past and present, of Greek economy? Yeah, well, actually, we can talk about it now if you want. Let me see if we have any more questions. DXY is pushing up against the 4-year trend line, and platinum. Yeah, let me cover those very fast. So the DXY, whoop, wrong place to open the chart. Here it is. So the DXY definitely remaining well bid, right? I mean, we're still in this grind higher. I don't see any real resistance until we retest that channel's trendline resistance. So, 100, here we come. I mean, we can easily move to 100. And in general now, as long as we trade above like 98.20, I think that the path of least resistance remains to the upside. Now, would I be trying to be long the DXY? Personally, no, I wouldn't, because even when it's moving higher, the dollar is in general grinding higher. It's not like leaping higher. So I still believe that you can make money both ways. Being both short or long the dollar depends on which currency pair you choose, because keep in mind that big part of this DXY move has come solely from what the euro has been doing. Don't forget that anyhow the euro is 58% of the DXY. So, just this move, just this recent move lower from the euro is what we're seeing here from the DXY. So in general, the DXY is not doing much, broadly. So, just pick your markets. I mean, there are markets that you can be short the dollar and make money, or being long the dollar and make money. That's why we have this kind of horrible environment in FX. Platinum. Yeah, last one before I cover briefly, the Greek situation for a friend here. So here's the platinum chart, and nothing has changed since last week. Meaning, two interpretations here. This is like a triangle about to break higher. In which case, look for this channel's trend line resistance to be tested. But keep in mind that 950, 955 is a pivot area. As long as we're above it, it makes sense if you want to be long. But if we break below it, we trigger that head and shoulders formation, in which case you don't want to be long. So against 950, it's absolutely fine looking for more upside. But if we break below it, I think that at the very least we should come down and retest this area. You see, we have several trend lines passing between 900, 910. So I think, between below 950, we should find ourselves testing that area rather fast. So that's what I think about platinum. Now, having to do with the Greek situation, Greek had to go through a painful period of balancing a completely messed up economy, right? Greece was running before this bubble burst something like close to a 15% deficit, yearly deficit. Deficits exploded really during the past couple of years before the Great Recession. And obviously, this was a completely unsustainable situation, and it had to go through austerity, what everybody else is going to have to do sooner rather than later. That was quite painful for the citizens, but absolutely necessary for the economy. Recessions are very useful because they balance out the excesses and the imbalances that, how can I say it, unhealthy expansions create. Because, there are expansions and expansions. There are expansions based on healthy fundamentals, which is great. And there are expansions based solely on debt and consumption, which are unsustainable. So that's what Greece had. And the Greek economy is at a rather fine point at the moment because it has been running for several years a primary surplus. Debt is still high, but servicing of the debt is low. And most importantly, the trajectory of the debt is oppositely from other countries to be reduced and not to be increased. So, as long as that's the case, and as long as the new government is implementing reforms that actually move the economy more towards, free type of model economy, things can be better. I mean, Greece still has a couple of sectors that perform really well, mainly shipping and tourism, and that's it, more or less. If you have any more specific questions, just go ahead and ask me and we can cover those tomorrow. Coach, do we have an interview?
Yes, we do, because it's President's Day. I have Abraham Lincoln
Clinton.
with us.
Yeah, you brought Clinton.
No, I brought Abraham Lincoln in here. Abe, did you really cut down a cherry tree? Yes, I did, but I replanted one. Abe, were you Jewish because you got shot in the temple? No, that's the anatomy of where I was shot. I read the Bible and I was a Christian. Abe, what was your favorite part of the Civil War? Going to the Ford Theater with my wife.
Somebody's
That
in a
was a
good
good
mood
time.
today.
What?
Somebody's in a good mood today, I
Oh,
see.
look who's joining us now. Jimmy Carter. Hiya, Jimmy. How old are you going to live to? 198.
Like last time
I'm going to build houses.
Last time I saw him on TV, he doesn't look very hot.
Well, he's almost 100.
Yeah, I know, but I mean, he looks
survived
like
he still gets on ladders and builds and falls and pretty amazing.
He's definitely had a good life. I mean,
yeah,
if only we share his luck.
Yeah, and and don't forget his brother Billy and Billy Bear. God, I long for the old days. Anyway, guys, that's a wrap. We're going to have some action tomorrow. And Steve is very bullish Greece. In fact, John Travolta, who starred in Greece, is going to be traveling to Athens.
I'm decently bullish Greece, and that comes from somebody that was extremely bearish Greece for many, many years. I mean, extremely bearish. I was actually advising friends, family, etc. since mid 2000s to get rid of
to the Ukraine.
No. But get rid of any Greek exposure they had.
Yeah.
Be it financial assets, houses, anything else. I was telling them, you'll be able to rebuy them a lot cheaper.
Yeah. Okay. So you waited for the crash to buy, right? Your house.
Unfortunately, we do have real estate, and it's hard persuading older people to get rid of it. Stelios had the same problem with his parents.
Yeah.
So, we had to suffer through that. You know how it is. It's very hard to persuade.
I know everything. I've experienced everything.
Yeah, it's very hard to persuade older generation people that they might actually end up losing money from real estate because, many of them hadn't actually experienced that.
Yeah. Yeah.
Yeah.
All right. Well, that's a wrap, everyone. Oh, Jason wants me to interview you.
Me?
Yeah.
Don't we spend enough time talking with each other on a daily basis?
Steve, tell us about how you got into.
Actually, you've
Who
done
do you-
that on FX Street.
Oh yeah, we did. Yeah.
You've done that on FX Street.
Who do you blame for you getting into this business?
I've told you, my uncle, actually.
Oh yeah, your uncle, the
Yeah, my
big
uncle.
trader. Yeah.
Yeah,
Okay.
exactly.
All right. All right. Well, say hi to Uncle Nick for me.
I'm trying to persuade Uncle Vangelis, actually, to come for an interview because, you know, you would really enjoy having him.
Oh, that'd
You
be a
would
blast.
really enjoy having. He's super experienced. He made like shitloads of money at the good times.
Yeah.
But he was a workaholic like nobody else. I mean, he was actually sleeping on the trading floor of the bank.
Yeah.
But
Wow.
yeah, I
Sleeping
think
there.
yeah, actually he did. Yeah, he did. He was the only one in the bank that had actually a permit to be overnight and send orders, because back then, as you know very well, you could actually destroy the bank overnight if you were reckless. I mean, there was no control. You know what I mean?
Yeah, like Nick Leeson.
Yeah, he gave all orders through phone, so he could actually blow up the bank, overnight.
And look at how much money he saved on rent sleeping in the office.
Yeah, he lost a couple of marriages though, but you know how that works.
Yeah, see?
Yeah.
I've experienced everything. All right, so anyway, guys, we'll see you tomorrow. Don't forget to join and subscribe. And you know, when Blake talks about our sponsor, there's no law against having more than one account. And sometimes you need to run a racehorse against another one to know what kind of, where your better situation is, comparing it. So we'll see everyone tomorrow. Don't just count your pips, count your blessings. Adios. Thanks for hanging with us on President's Day, and looking forward to some trading activity tomorrow. So Steve, take it easy, buddy. Hope you enjoyed my interview with Abe Lincoln, and we'll see everyone tomorrow. Tomorrow I have a crypto guy, David at Crypto Wolfpack. So we'll be covering some things. Maybe you'll take a look at some altcoins, which is there's rumors that they've been moving substantially so that people could, big money could distribute them again. So we'll see about that, what David thinks of that tomorrow. All right, everyone, enjoy your day. Go smell the roses. Spring's around the corner. Adios. Thanks, Steve.